reporting that Amazon will lay off 10,000 workers starting this week.
Amazon came out itself.
Amazon.
Amazon is walking back an innovative product of theirs. They're going to close several Amazon Go stores across the country.
Amazon, the e-commerce giant that revolutionized online shopping, has been dominating the retail landscape for years. However, beneath its seemingly unstoppable success, there are alarming signs that some Amazon stores are struggling to make ends meet. In this video, we'll explore 10 key indicators that shed light on the challenges faced by these stores. These signs should raise concerns not only for Amazon, but also for the broader retail industry. So, let's get started. Number 10. Increased price sensitivity, another alarming sign for Amazon. Another concerning sign for Amazon is the growing price sensitivity among its customers. As people become more conscious of prices, they're actively searching for cheaper options instead of relying solely on Amazon. This trend poses a significant threat to the company's profit margins. If Amazon is unable to pass on its rising costs to customers, it may struggle to maintain its profitability. A decrease in pricing power is a worrisome sign for any retailer, as it limits their ability to maintain healthy profit margins. The fact that customers are actively seeking alternatives to Amazon's offerings highlights the pressing need for the company to address this issue and find ways to stay competitive in an increasingly price-driven market. Number 9. Inefficient operations, a troubling sign for Amazon. Efficiency is the lifeblood of a successful business, allowing it to operate smoothly and profitably. However, alarming reports suggest that Amazon's operations are becoming less efficient, raising concerns about the company's financial well-being. Inefficiencies within Amazon can have far-reaching consequences. They result in higher costs as resources are wasted and productivity suffers. These additional expenses put pressure on the company's bottom line, squeezing its profitability. Furthermore, inefficiencies can lead to delayed deliveries, frustrating customers, and damaging Amazon's reputation for fast and reliable service. Dissatisfied customers may turn to competitors, leading to a loss of market share and revenue. If Amazon continues to struggle in streamlining its operations, it could indicate underlying financial troubles. Addressing these inefficiencies promptly becomes crucial for the company's long-term sustainability and success in the fiercely competitive e-commerce landscape. Number 8. Slowing revenue growth. Amazon's revenue has been on the rise, but there are alarming signs that its growth rate is slowing down. This deceleration in revenue growth raises concerns about the company's ability to attract new customers and maintain sales levels from its existing customer base. It could indicate that Amazon is encountering difficulties in expanding its market share, or that customers are turning to alternative options for their online shopping needs. A decline in revenue growth is a warning signal for investors, as it suggests that Amazon's financial performance may not be as robust as it once was. This slowdown demands attention and highlights the need for Amazon to take strategic measures to revive its revenue growth and ensure a sustainable future. Number 7. Increased competition. For years, Amazon has reigned supreme as the undisputed king of e-commerce, but the tides are shifting. In recent times, competition has surged, threatening Amazon's dominance. New players have emerged, armed with innovative strategies and a hunger for success. Meanwhile, existing rivals have bolstered their offerings, vying for a larger slice of the e-commerce pie. This intensified competition poses a grave challenge for Amazon. As new entrants and established competitors vie for the attention of online shoppers, the pressure on Amazon's profit margins increases. To stay ahead, Amazon must invest more in marketing and promotions, further straining its financial resources. The once unassailable position Amazon enjoyed is now under threat. This escalating battle for market share sounds the alarm for Amazon, signaling potential financial struggles and the need to adapt swiftly to an ever-evolving competitive landscape. Number 6. Stock price volatility. The stock market serves as a gauge of a company's financial well-being, and the recent stock price volatility for Amazon is certainly a cause for alarm. When share prices experience dramatic fluctuations, it can indicate uncertainty among investors. Such volatility reflects doubts about Amazon's ability to consistently generate profits and sustain its growth trajectory. Investors may be concerned about factors like increasing competition, rising operational costs, or changes in consumer behavior that could impact Amazon's future performance. The wild swings in stock prices underscore the need for caution and careful evaluation of Amazon's financial stability in the eyes of investors and stakeholders. Number 5. High debt levels. Amazon's financial reports reveal a mounting debt burden, and this is a cause for concern. While it's not unusual for large corporations to have some debt, excessively high levels raise alarm bells. It suggests that Amazon is heavily relying on borrowing to fund its day-to-day operations. Such a heavy debt load indicates potential cash flow problems and could lead to difficulties in paying back the borrowed money. This situation is alarming because it puts Amazon at risk of financial instability. If the company struggles to service its debt, it may face limitations in investing in growth initiatives or even face the possibility of defaulting on its loans. Number 4. Closure of physical stores. Despite its online retail dominance, Amazon ventured into physical stores in recent years. However, numerous brick-and-mortar ventures have faced closure. This worrisome trend suggests that Amazon's offline retail operations are struggling to compete with traditional retailers and failing to meet revenue targets. The closure of physical stores is alarming, as it implies that Amazon's efforts to expand into the physical retail space have not been successful. It raises questions about the viability of Amazon's strategy to bridge the gap between the online and offline shopping experience. This development is a clear indication that even the almighty Amazon is facing significant challenges in the fiercely competitive retail landscapes. Number 3. Scaling back expansion plans. Amazon is renowned for its ambitious expansion strategies and ventures into diverse industries and is experiencing a significant pullback in its expansion plans. This shift is concerning and suggests that Amazon is grappling with a lack of resources to support its growth initiatives. In recent times, Amazon has been known for venturing into new territories, diversifying its offerings beyond traditional e-commerce. However, the noticeable scaling back of these expansion plans raises red flags. It indicates that the company may be facing financial difficulties, unable to generate sufficient resources to sustain its ambitious growth trajectory. The decision to scale back expansion can have far-reaching consequences. It not only affects Amazon's ability to tap into new markets, but also raises questions about its overall financial health. This alarming development necessitates a closer look at the company's financial management and long-term sustainability. Number 2. Workforce layoff. Workforce layoffs are a clear sign that Amazon is facing financial difficulties. When a company is struggling to manage its expenses, it often resorts to cutting jobs as a desperate measure. Unfortunately, these layoffs disrupt the lives of hard-working employees who suddenly find themselves without a source of income. It is not a decision taken lightly, as it reflects the internal financial strain that Amazon is experiencing. Such a wave of job cuts within a company as massive as Amazon raises concerns about its abilities to sustain its operations and suggests that the company's financial situation is more precarious than meets the eye. Number 1. Declining profits. It's time to take notice of a worrisome trend in Amazon's financial performance: the decline in its profits. Despite the company's massive revenue, its profit margins have been shrinking. This indicates that Amazon's operational costs are skyrocketing, eating into its earnings. Such a decline in profits is a cause for concern, as it raises doubts about the company's long-term sustainability. With expenses outpacing income, Amazon may find it increasingly difficult to invest in innovation, expand its operations, and deliver on its promises to customers. The decline in profits serves as a glaring alarm, signaling that Amazon's financial well-being is at stake. While Amazon has long been a symbol of success and innovation in the retail industry, these signs indicate that the company is facing significant financial challenges. From declining profits to inefficient operations, it remains to be seen how Amazon will navigate these hurdles and adapt to an ever-changing market. But the current situation demands attention and caution for investors and stakeholders alike. Now that you're aware of this situation, it's essential to stay informed and keep a watchful eye on the future of this retail giant. If you found this video informative, don't forget to give it a thumbs up and subscribe to our channel for more thought-provoking content like this. And remember, knowledge is power, so stay informed and stay ahead. Thanks for watching. Don't miss out on our future updates.